Welcome to Commercial Real Estate Now in partnership with CBRE Econometric Advisors, co-host Dan Diebel. I'm Carly Iacono. Dan, another month, another great episode of retail content. How you doing?
I am doing great. Excited for this month's episode. It's something that I've been working on for a long time. So, pretty excited to have it out into the public's consumption.
Yes, and we are so happy that we get an early look at all of the data and we're able to chat about it and share with our listeners. So, I don't know if we need like a drum roll. I don't know if it's that exciting, but just, imagine a drum roll right now. We are talking about retail obsolescence, which is a pretty flashy headline. If we were to say nothing else, I think that would be, pretty clickbaity. But it's real. It's a real topic, and it's something that we need to define, we need to quantify, and we need to talk about. So this is especially relevant to me because we have been talking for years, right, about the exceedingly low retail vacancy rate. Very, very tight retail market, which we're still in. And then after I publish an episode and you and I are talking, or some of our other guests, I inevitably will have someone call me and say, but I have all these empty retail spaces in my town. Or the street I shop on, has stores that have been closed down for a year, 2 years. What are you talking about? What do you mean? And then, we have a conversation that it's market specific, it's space specific, all this. But there's this new concept that I hadn't worked into the conversation until today called retail obsolescence. So that is becoming an important piece of the vacancy discussion. And I'm really happy we're covering it. So before we get into all of your granular data, just start out, please, with a definition of what obsolete retail means in the economic lens.
Yeah. So, thanks, Carly, and thank you for that synopsis because obsolete space is a certainly new concern in the retail sector, as we'll discuss. And for this report, we defined obsolete space as existing retail space that is vacant. That means it has no tenant currently occupying it, and it's unavailable to rent. That means it's not on the market. And
so could it be subject to an existing lease? This is different than dark retail in your definition, correct?
Correct, yeah. If there's an existing lease, well, it'll be listed for sublet, or we will not turn it into obsolete until it has no lease on it, no tenant in it, it's part of our competitive set, and then it becomes unavailable to rent out for a tenant. So a tenant cannot move into that space as far as we can tell, of course. There are always off-market deals happening.
So obsolete retail, like you just said, just to recap, means that there is no tenant in place. Even if the tenant has vacated, there's no lease encumbering that property. It is not currently being marketed. Maybe it was marketed in the past, but enough time has passed that you feel data-wise it is not leasable for some reason. Is that correct?
Yes. Just if it's on the market and it's still listed, no matter how long it's been listed for, that's not obsolete space. As long as somebody could walk up and possibly rent it, we're not counting that as obsolete space. And I realize that some of that space does qualify probably as obsolete space, but it's not going to be in our definition of obsolescence for this report and this discussion.
So we're going to go into the numbers, but I think just big picture, it's meaningful that there is enough space now that has transitioned from vacant to obsolete that we're now having a conversation about it. In fact, you have a whole report about it. And I'm excited to hear why you think this has shifted. So we went through sort of the overview of what it is. How does this fit in with vacancy? Do you want to give us sort of the big picture of what obsolete space looks like by the numbers as compared to vacant, as compared to total retail, so we can get an idea of the scope of what we're discussing. That would be helpful.
Yeah, absolutely. So the there's always been some amount of obsolete space in the retail sector. Typically, it's been below 1%. Uh, and that's even with higher levels of availability and vacancy reaching up towards the double digits. So there's always been that kind of obsolete space hanging on your psyche. But, you know, heading into COVID, actually, heading into 2020, we started to see obsolete space tick up. And then, of course, COVID burned off all of the fat of retail. It really, took out anything extra that was hanging on in the retail sector, kind of moved it into what we would describe as obsolescence. Currently, our availability rate, so the available space, which is space that is either vacant or currently occupied but available to rent, is sitting at 4.8%.
And that's
If
low.
we
That's still historically low.
Still historically low, absolutely. And these are the headlines that, I mean, we've been putting them out too at CBRE
Of course.
because they are true, right? Historically low availability, historically low vacancy in retail at the moment. However, if we include this obsolete space that's hanging on in the background and onto our psyches, certainly, that number increases to 6.1%.
That's material. Was that like
Yeah.
a 30% jump, just round numbers? I mean, that's a lot.
Yeah, 30% of all available and vacant space is obsolete. So
Wow.
about a third of the space, or sorry, if we were to include obsolescence in the space that is available and vacant, it would make up 30% of that space.
The
Yes.
total amount. Yeah.
Yeah.
Now, are we seeing a concentration in malls? Like, is there another piece to this story that is very asset type specific, or is it broader than that?
Yeah, absolutely. So as you as you kind of set up here, malls have been suffering. It makes sense to think that they might be experiencing more obsolescence than other sectors. And in fact, malls make up 40% of all of the obsolete space. Or I apologize, super regional malls make up 40% of all of the obsolete space. If we widen that to the regional malls, power centers, and lifestyle centers, we're now sitting at about 55% of all of the obsolete space is in these larger format type centers, but specifically these super regional malls that were just too big for their britches.
I'm actually surprised that that leaves 45% of obsolete retail that is not in a mall of any variety. That seems really high to me. Is there any other sort of asset indicators that break that down even further?
Yeah. So part of that has to do with the fact that uh, super regional malls, despite being very large, only make up about 5% of all of the retail square footage.
Okay.
So with them sitting at only 5%, but taking 40% of the obsolescence, that category is by far the most out of weight with its representation in the market. On the other side, if we look at freestanding, which is typically that triple net leasing building, that is on the flip side, where about 46% of the retail space is freestanding space. Only 16%, it makes up only 16% of the obsolete space. So,
See, I knew single tenant net lease was the golden child here. I knew we were going to get to that someday. Okay, go on.
yeah, so that ratio is very healthy, right? If we were to see things like in lifestyle centers, they're about 2% of the square footage, they're about 2% of the obsolescence, right? There are no indicators there of necessarily unhealthy outcomes. Just that some of it is going obsolete, and it's going obsolete at the rate we would kind of expect. When we look at super regional malls, that's clearly not the case.
So taking the super regional malls out of the discussion for just a moment, could it be that landlords are financially strapped and realize they don't have money for the TI, the tenant improvement allowance that would be required to attract a new tenant? So they're not marketing the space. Like, do you think there's any other factors at play that maybe the space is still valid, but there are landlord limitations that are preventing the leasing?
Yeah, absolutely. So if the space is demolished or redone into like a multifamily space or something like that, it would not be counted in the obsolete space. However, what you're bringing up would be counted in obsolete space, even though it could be used. The owner just doesn't want it out on the market for one reason or another. Maybe they don't think the rents justify the operating costs and they just want to take the taxes and they don't want to pay any operating costs. Uh, there are lots of reasons why a landlord might not want to put it on the market. I can't speculate too much about those reasons within the data. Just that it would seem to imply that rents in some of these areas do not justify the operating costs of some of these buildings.
Right, right. So it becomes a conversation, not necessarily that, wow, retail is, obsolete, right? A lot of the space just isn't usable. I mean, that is the big picture point, but
Yeah.
there's more nuance to it that maybe it's not financially profitable to market it or re-tenant it or improve it right now. We don't know how big of a piece that is, but there could be other factors at play, not just that there is not a retailer that wants to go there or another
Right.
tenant, right, at this time. But it's still obsolete space if it cannot be leased by a tenant right now, no matter the reason, right?
Yes, as long as that reason is not it's being like refurbished or
Right.
it's actively being turned into a different type of space or something like that. Right? It has to
Right.
be,
Basically just sitting.
correct. It's just sitting there,
Yeah.
empty.
So we have some differentiators within the asset types as expected. What about geography? Are there certain markets that are contributing to these numbers more than others? And how does that break down?
Yeah. So, kind of jumping off of the malls, those super regional malls making up the largest amount of obsolete space. Well, where do we think of when we think of malls? We think of the Midwest, or at least I think of the Midwest when I think of malls. That's a common thing in the US, right? Like it's not
I
just
don't
because
know.
we're in retail.
We have a lot of malls in New Jersey. I am always amazed, right? In the tri-state New York area, how many malls there are. But yes, I think the thought of spending your weekends in a mall maybe feels more Midwestern, but we're speculating.
Yeah. And also the New Jersey story does not fit with the data, so we can just,
So
throw that right out there.
it's usually an
Um,
outlier for so many reasons. That's another
fair enough.
episode.
I love it. But yeah, the
Okay, so back to
Midwest,
the Midwest. So we're not
yeah,
picking on the Midwest or New Jersey, maybe a little, but
not picking on
what's
either of these places, but yeah.
what's happening in the Midwest?
Yeah, so the Midwest has about 25% of the obsolete space, and it has about 20% of the total retail space. So when it has more obsolete space than retail space, that's when we see more suffering. And of course, the Midwest is being pulled on by those super regional malls that it built quite heavily. I would assume New Jersey did not build a bunch of super regional malls, but that's knowable for me. I can figure that out.
We can circle back on that and just do
Yeah.
an Oklahoma, New Jersey comparison for fun. All right, when we have some downtime, we'll just,
Yeah.
we'll dive into those comparisons.
Mhm. Yeah,
So
compare.
aside from like malls in the Midwest, are there other trends geographically that you're seeing, or are other pockets that are kind of contributing to the numbers more than their fair share?
Yeah, I would say otherwise, the South and the West are pretty much on par. The Northeast is actually a standout. It is outperforming in terms of obsolescence, which makes a lot of sense. Retail is typically denser here. It's not as spread out. Most of those spaces, even if they've been for rent for a long time, are hmm, still trying to be rented, and I think it would be a fool's errand to call them obsolete.
Right. So why do we think this is occurring? Again, I feel like the malls are a different story. Your class B and C malls, A malls, we know
Mhm.
are performing very, very well. Um, Aside from that subset, why do we think obsolete space is increasing? And we speculated on maybe landlord financial situations, but that's hard to see in the data. What else do you think is contributing? And do you really believe that some of this space just will not be retail in the future? It's just not maybe the access or the visibility. Like, do we know why this is jumping so much now?
Yeah. So great questions, all of them. I'll try to get to as many of them as I can.
We're hitting them all. Come on,
Okay.
one by one.
Just remind me as we go. Yes, the malls are definitely, we should set those super regional malls aside. When we set them aside, we do see that these more suburban areas, these areas that experienced more suburban sprawl, experienced more development of retail. And, this concept of developing retail and then more retail and then more retail and more retail around it kept getting bigger and bigger because it kept working. And retail just kind of continued to agglomerate and make larger and larger retailing areas. So we do see a concentration, with the exception of maybe Indiana, where the more spread in the geography, the more obsolescence we have because it was just overbuilt.
Got it. So there could be a scenario, maybe, where over time, as population grows and expands, if it does in certain markets, the need for this, let's call it extra retail, could come back in those particular markets, but it would require some sort of change in demand in those areas.
Yeah.
That
You
one of
would
the factors. Okay.
yeah, you'd need some sort of influx of population, be that through, Philadelphia encouraged a bunch of multifamily development in their downtown area, and that brought back, uh, wallets, and those wallets started to spend, which brought back retail rental growth to Philadelphia. So, some of these super regional malls have already been started to be redeveloped into mixed use cases, which is a good way of getting footprints into the area. I would just caution that you have to make sure the retail serves the tenants
Community or
of
the
the
development.
building.
Yeah,
Yeah, yeah.
exactly.
Where
And not
whereas
just put
some
a Starbucks in because you want a Starbucks as a landlord. Make sure your
yeah,
tenants want the Starbucks,
yes, yeah.
of
That's
course.
that hangs heavy on investors' minds, or at least the ones that I've talked to, is that if there is kind of in these mixed use, the type of retail fitting the demographics is very important because
Mhm.
they want to pick up on that kind of double dividend, right? They're getting the multifamily rents, and then hopefully they're getting decent retail rents as well.
So aside from what sounds like excess supply really in certain pockets, what else would you say is contributing to this rise in obsolete retail?
I think it is the continued concentration of retailers and the rise of analytics.
That's a really interesting point, right? You have more data, so you want to be in the better locations because now you can prove what those are through data.
Mm-hmm.
Instead
Yeah,
of just
and
speculate, if you build it, they will come.
absolutely. And that used to be, boy, I don't know what clients we can or cannot talk about. I know that there,
Probably none.
yeah, right. There was a famous strategy for retailers of a very large retailer, and they're like second in command, the very next competitor to them.
Mhm.
And all the second competitor did was follow whatever the first competitor did. If they opened a store, then the second competitor followed and opened the store. Very cheap way of doing analytics.
Right.
But, again, we've come a long way. Analytics has come a long way. The spaces that retailers want are becoming more and more specific. They're becoming more and more picky. They want to expand, but they're savvy. They're not going to expand just to expand and hope that, yeah, like you referenced before, Field of Dreams, right? If you
Right.
build it, they will come. That's not the case anymore, and it's certainly not the case for super regional malls.
So if you're a retailer and you're trying to expand and you see numbers of obsolescence and vacancy, are you believing that vacancy is 4.8%? I can't find space? Or are you saying, wow, gosh, there's all this other space that is actually out there? Maybe I should adjust my expansion model. Or you think that the retailers are just looking at the vacant space that theoretically is in demand, and the rest of this is not even in the discussion anymore?
I believe that this space that is obsolete is not currently in the discussion for renting. I think that retailers are starting to they experimented with new layouts, new store sizes, kind of coming out of the pandemic and new locations. There was a lot of learning and growth during that period, and I think that they could take that into some of these obsolete spaces, maybe move into plays of, own and operate if the because it's possible some of these obsolete spaces, the owner just doesn't want to put up with it anymore, essentially. And they could
Right.
get, a lucrative deal on a space they could then make their own. So I think there are some interesting opportunities that come about because of the obsolescence. But the what we've seen in terms of the average quarters a building stays vacant and the average quarters a building stays available gives us some insight into how they're making their decisions. The average quarters a building stays available continues to drop. It's right in between 7 and 8 quarters. Whereas the average quarters a building stays vacant actually rose a little bit.
Interesting. Okay.
Right. So that means, these buildings that are coming available are snatched up very quickly. Sometimes, many times before they even come vacant. And these buildings that are sitting vacant have been sitting vacant for a long time and continue to sit vacant, speaking to that bifurcation and retailers' desires to find the right building in the right place.
Just one quick point of clarification. So available means that there could still be a lease in place, but it's available perhaps for sublease or a buyout, right? It's not vacant. There's still a tenant, but it is available for sublease or a new tenant to come in. Is that correct?
Correct. Or
Okay.
available for sublease or available for negotiations, right?
Right.
Occasionally landlords will list as available for bargaining power. So, it could be available for that
Right.
reason. Yeah.
Right. Okay. So how does all of this weigh on consumer sentiment? Because most shoppers are sadly not listening to our podcast. So they may not understand that all of this space is not out there waiting, or hoping to be snapped up by retailers. Some of it is obsolete, kind of off the market for a significant time period. When you walk down the street and you see, maybe you're in one of these smaller towns or you see all these vacancies, is this growth in obsolete retail affecting consumer sentiment?
I think it certainly has affected consumer sentiment. If you look at consumer sentiment, the Michigan survey, the consumer sentiment pre-pandemic is at a totally different level than it is post-pandemic.
Mm-hmm.
And I think in part that's because, okay, we all know that empty retail building that's just been sitting there for forever and nothing's been filling it. It's just a little bit decayed or a lot decayed now by this point, and it doesn't feel good to look at, drive by, any of that. So I think that really does weigh on consumer psyches. I know that it weighs on investor psyches. Um, but certainly as a consumer, I don't like seeing a bunch of empty buildings around. Uh, so I think that if some of them were to get demolished, it might be a move in the right direction.
We're really hoping for maybe another use entirely. Maybe they go medical, maybe they go multifamily. Is that sort of how we're taking properties out of obsolescence typically, as a redevelopment of some sort?
Yeah. Yeah. Most of the properties that have moved out of obsolescence have been redevelopments. Most of them into that kind of mixed use genre. There is an interesting mixed use medical office one. We didn't discuss that. I'm surprised you nailed that one right on the head. That took over an old retail pad. So yeah, most of it is redevelopment into non-retail spaces with a small retail component. And I think that's the way to go. If we look at how freestanding buildings are doing and how strip centers are doing, both performing particularly well at this time, it makes sense that some of this retail that was meant to serve a very wide geographic area is maybe underperforming, and we need to go a little bit more localized in our retail.
I would imagine if construction costs come down, if financing becomes more creative to projects, right? All these ifs that have been constraining development for the last few years and still are, if that changes, that could have a material impact on the retail obsolescence numbers, because development would make more sense. So I feel like that could be contributing to the rise in these numbers, because it is very difficult to get redevelopments to pencil in any form right now. So I wonder if this is peaking because of that factor as well. Maybe there are ideas for a lot of these spaces, they just don't quite make financial sense right now.
Yeah, it's penciling any sort of retail project right now is very difficult.
Mm-hmm. So this may be a temporary concern, hopefully, if all these other factors improve over time. Eternal optimist. I know. All this in mind, what are you expecting for leasing activity? I mean, we touched on obsolescence and that the retailers aren't even really looking at these spaces. There's still very low vacancy in the in-demand spaces, or the ones that are being considered. How do you think this will all impact leasing activity this year, rest of the year?
I think it's going to slow down, but we've been seeing leasing activity slow down, but not because of desire. It's been limited by space. This last quarter is the first quarter we've had an uptick in availability from 4.7 to 4.8, which is very small.
Mild.
Right.
But still statistically significant, but mild.
Sure. And most of that is because of the JOANN bankruptcies and power centers and a lot of these outer lying buildings of power centers not having issues finding occupiers right now. And I wouldn't say that that makes up the core of retail. Those buildings tend to have a fair amount of churn the further away they are from the center of a power center or an anchor. So I think that the desire for new spaces is going to more appropriately meet the availability of those spaces to rent as retailers accept that construction costs are high. New spaces are not going to be coming about, and either they have to accept what's on the market at present or come up with a new strategy.
And hopefully that continued demand will stabilize rents or keep rents stable. They've been growing for some time now. So my hope is that because the retailers still want to expand, vacancy is still low, even though it ticked up that 0.1%, that we'll see that in the rent numbers being consistent or maybe even slightly increasing still. Do you think that rents will be affected at all?
The rent story is, I would assume, at this point, I don't think this is our main effect on rents.
Right.
This story of obsolescence and low vacancy and high obsolescence pushes rents up, certainly. It provides lift for rents. The main compression in rental growth right now is going to be the looming tariffs, because
Right.
that's going to erode margins in one way or another, depending on how the tariffs pass through the system. But
Right.
that would be my concern about making a rental growth call or not, because if the tariffs don't materialize, then certainly the market will remain landlord favored and we'll see upward pressure on rents.
So many competing factors right now. It's just very difficult to forecast anything, right? It seems like everything that's happening economically is having adverse effect, not adverse, opposite effects. So figuring out which is going to push and pull further in one direction or the other is definitely challenging.
Mhm. Lots of winds blowing in every direction right now.
Yes, exciting times, that's for sure. All right, that was really interesting. Thank you for outlining obsolescence, sharing this sort of shift in the data that is material. And I think you gave us a very clear picture of what's happening with retail and why perhaps we see empty retail spaces that are not being filled. I think you really gave us a very clear and complete picture of vacancy versus obsolescence versus availability. So thank you. Any parting thoughts you'd like to share?
Obsolescence is an opportunity overall. And that's it. Thank you so much. Appreciate it.
Thanks, Dan. Great to see you. For everyone listening, that was this episode of Commercial Real Estate Now in partnership with CBRE Econometric Advisors. We're so happy you tuned in, and we look forward to seeing you again very soon. Take care, everyone.